Well, welcome to my podcast. I'm Brian Ledke, financial planner for Forward Wealth Group. I own and operate the organization as well. What I wanted to go over today was just to have an opportunity to share with you what makes my fund selection different from what you may find out there. I not only use a one-step process, I actually use a two-step process involving Morningstar and nitrogen. Let me get started moving forward here on this. What I take a look at when I go into Morningstar is we first start by opening up Morningstar, going into mutual funds, and selecting their screener. I will start with mutual funds, but we will also go over the process for ETFs as well. So when I open up the screener, it'll ask me a number of different things. I have a number of different drop-down boxes, and I will start with looking at Commonwealth. Commonwealth is my broker-dealer, and they have over 6,000 mutual funds for me to choose from. That's quite a few, right? So we need to pare that down into what we're actually looking for. Today, we're going to be looking at large cap growth. Large cap growth is one sector in the economy that happens to be your largest companies with a growth segment to it. So it's going to be companies like Amazon, Nvidia, Microsoft, Intel, Apple, all these companies that you're familiar with and heard of in the United States. So from there, what I'll take a look at is the next drop-down box is choosing the large cap growth sector. That'll further pare down those 6,000 funds. I also want to choose one that's open to new investments, as it doesn't do any good to look at funds that we can't invest in at this time. Sometimes they do close down these funds because they have too much money in them, and as they grow and they get so large that they keep taking in new funds, that they actually become more like an index, or they can move the market by having so much money in them that when they buy or sell, it actually affects the stocks that are inside their portfolio. So that's why they close down funds. And then we'll take a look at either 4 or 5 star rating. In this case, there's quite a few in the 4 star, so we'll use the 5 star rating. And then they also have another one called gold, silver, bronze. And so I'll click on all 3 of those. There's still quite a few left, so I will take the bronze one off and we'll just look at the gold and silver. From here now, I move over to the chart that goes over their rates of return. I'm looking in particular at their 3 to 5 years because I want to see how well they've done for a long period of time. I want to make sure that they've gone through some downturns and how they performed during that period of time. We do know the market goes up and down, and it simply is a matter of time before we see either one of those happen. And so I like to see how these fund managers have been performing on the upside as well as to the downside. That's why I like to see at least 3 to 5 years in the performance of the funds. Now, I will look at the short term and see if they've really been performing poorly in the last 6 months or a year to date. That does play a role in it. If it's just they're just not doing quite as well, maybe in the top 50th percentile instead of the top 25th percentile, that's not quite as important. But if they're in the bottom 25th percentile, that might be an indication of something going wrong right now. So we'll take a look. We'll take a couple of these funds, and I will deep dive into them by opening up the Morningstar report and taking a look at what's under the hood. So when I do that, we'll go to page 2 of the Morningstar report. It talks about how these funds have performed compared to their peers, to the category, and so on. There's what's called a Lipper rating. A Lipper rating is 1 to 100, 100 being the worst, 1 being the best. So we're going to, again, take a look at how they've been performing each year. That's what the first chart shows. And then move down a little bit to take a look at what the 3 months, 6 months, 1 year, 3 year, 5 year, and if it has more than 5 years, you take a look at that as well to see what Lipper rating that it has. So if it all looks good, we continue down, and then I look at the risk. Ultimately, what I'm looking for here in the risk section is I'd love to find funds that have average amount of risk, but above average return. That's like the best that you can find. What that means is that the fund manager isn't taking any undue risk to get that better rate of return. They are simply managing the portfolio well balancing risk in the portfolio, which is what I'm trying to do in my plans as well. Then I take a look at standard deviation. That standard deviation will give you the deviation compared to its peers, as well as the category, as well as the max drawdown. So those are all things that I take a look at when I'm looking at a fund for selection. Now, once I've gone through, let's say I choose one of the mutual funds here and say, hey, this one looks pretty good. We'll take a look at that one. Now I go through the same process with ETFs. ETFs are funds that are traded throughout the business day, so 8:30 to 3 o'clock Central Time, where mutual funds are traded at the close of business day at 3 p.m. Central Time. So then we'll go back through the same process, find a couple of ETFs, go through the same thing, do a deep dive, look under the hood, see how these funds have been performing, and then pick a couple of those. So now I have a total of 3 funds that I've chosen. 1 mutual fund, 2 ETF funds, and I'm going to take those funds over to nitrogen, and we're going to see how they fare over there. So we take these 3 funds, I open up nitrogen, I put them in there, and now there's an evaluation done here. Now when you open it, you'll see that one of them says that it's a technology fund only. The other 2 say diversified. Well, I'm not looking for something just in technology. I want a well-diversified large cap growth. I hope this video gives you some ideas of how much time I spend on each fund to make sure that they are suitable for your situation. What I do for all my clients is I complete a full reevaluation every 6 months of my portfolios to make sure that these funds are still suitable. My goal is to position your portfolio for the best chance of success. Now, on your screen, you will see my information. You can call me here, our phone number listed. You can email us. You can text at that number as well, whichever is most convenient. Please check us out at forwardwealthgroup.com and check out our website. But we look forward to talking to you here in the future and answering any other additional questions you might have. Thank you very much for listening.